Risk tolerance is a real thing. And I always thought that me buying Apple and holding Apple was like the most safe thing. I entered the corporate world with when I was 20 in my 20s. I said, why are you not millionaires? This was the simplest strategy ever. Just buy Apple and buy Microsoft and buy Netflix and buy Amazon. And they just didn't have the risk tolerance to do it. When people are questioned, when they ask me, what's too heavy risk, I always say, are you losing sleep at night? Because my grandfather taught me if you lose sleep over an investment that you made, get out of the investment. It's not worth it because there's too many safe bets. And it's specifically in today's world with ETFs, why would you lose sleep when you can just put your money into VOO or SPY or one of those tools? And history has proven that, the eighth wonder of the world, compounding just works.
Does the macro side of things affect you in any which way?
Semi. I'm a bull at heart. I mean, Tom Lee, the perma bull. I think I'm probably right in the next in line behind him. And I think Josh Brown said it best. He said, all the analysts, you could just put, in January, you can just say that the S&P will be up 8%. And most of the time you're going to be right because that's, I think, the average over a number of years that it's up 8%. And you're going to be wrong about 20% of the time. But 80% of the time, you're either going to be close to right or you're going to greatly underperform. And then you can raise it through the year. And so it just pays to be a bull. I think macro, I get a lot of questions from listeners now about the election. I go back and I say, look at 2017. Trump won in 2016. Did the market crash in 2017? No. I think it returned like 30%. And then you go back and look at 2021. Biden won in 2020. What'd the market do in 2021? A lot of my performance is based on buy and hold. So I don't necessarily look at macro. Obviously, in 2022, when the Fed went into those huge rate hikes, that was just about, hey, I'm going to try and lose less than the S&P loses. I don't think I'm the best protector of capital around because I did lose in 2022. I'm not a hedge fund. I'm not shorting things. I'm not, going to take my Apple position. I think my average purchase price on Apple these days is like $15 in my account just because it's been buy and hold. There's no way I can hedge against losing money if that's going to go down. So I just try and make sure that I understand which way the market's going to go in a weekly, a monthly, and a quarterly basis. And I always tell people before you buy a stock, you better know when you're going to sell it. Because if you're going to sell it in a week, then sell it in a week. If you're going to sell it in a month, you sell it in a month. But if it goes down unexpectedly, like say you bought SMCI, like thinking this is a great opportunity, and then all of a sudden, all that stuff comes out. That's an opportunity to just, hey, I'm going to take my chips off the table. I think Warren Buffett put it best that Peter Lynch quote about watering your weeds and cutting your losers. I don't worry about the macro too much, but I do cover it every day. I base my performance on the Qs. I know most people like to use the S&P, but the Qs have outperformed everything, and that's been the basis of my large cap tech portfolio. So typically each morning I'll go over the Qs. I consider that to be macro.
So speaking of the Qs and speaking of the tech sector, we're seeing a lot of earnings come out from the big players there. Anything that's feeding your insight and strategies this week?
The largest position in my portfolio by far is Apple. I consider Apple to be my savings account. The problem that I have with Apple and adding it up here is you're paying 31 times earnings. And I don't think Apple has the growth in its line of sight right now to be a stock that justifies 31 times earnings. Google actually monetized AI. Apple, I think, is going to monetize AI through hardware. And that's where I think Apple comes into play. But with them slowly rolling it out, it does worry me with the valuation of Apple. Now, Amazon, I'm not worried about Amazon from a valuation perspective because who doesn't live with Amazon Prime? I get a Prime delivery like 2 days, 3 days a week, and I'm a minimalist. I know my parents get like 6 deliveries a week. but Bezos selling $3 billion worth of stock at $200, you're capped. So if you're going to buy it below 200, you just got to know your time frame. And from what I saw from Microsoft, I don't know that they're actually monetizing AI well enough. But I've got an Xbox in my house. I'm not living without my Xbox. 15-year-old Gary would have been like, oh my God, you can play video games in the middle of the day. And that Ultimate Game Pass is amazing. So, and then you have, Tesla. I own a Tesla car. And I tell people I bought a Model 3 in 2018. $65,000, I think, was what I paid for it. At its height, that car cost me $1 million because that $65,000 into the stock would have been $1 million. And Tesla is just an example, and Palantir is the current example. Valuation sometimes doesn't matter, and momentum can take you higher than you ever thought the stock can go. So when you go into a stock thinking, oh my God, it's too expensive, sometimes that's just not the case. So I don't think there's anything per se that I'm worried about. I had a good debate with somebody about whether valuation actually matters on Twitter Spaces one time in the past week. And I think it still does matter, but I don't think that in today's retail trading world, you turn your back on a stock just because it's valued too high. I think a lot of these high flyers that we've seen, you look at some of the high fly, Palantir is a great example. I didn't think Palantir was going to get past 25. I sold at 25. I was pounding the table for people to buy under 20. Once it got past 25, I'm like, it just doesn't make sense. I was wrong. A lot of people will worry about the valuation. I think I worry about the US debt more than I worry about the valuation of a stock. And the reason I worry about the US debt, gold is at an all-time high. I think the gold miners are actually beating the gold index. It's just kind of, you got to figure out where your comfort space is. And again, if I'm being kept up at night, my parents taught me well. In 2007, they sold out of their entire portfolio, and they missed out on that 2010 run-up. And then in 2000 with COVID, they also sold out of a large portion of their portfolio, and they missed out on that run-up. And I think that taught me during downturns, this is a buying opportunity. And I hate to say it because at some point in time, like in 2022, it wasn't a buying opportunity because we continued to go down. But it turned out to be, in a long run, if you looked at monthly candles, you were fine because you're still over where you were yesterday.
Don't forget, these episodes will be up with transcriptions at seekingalpha.com/WSB. And if you're not a subscriber, you can get full access at seekingalpha.com/subscriptions. A quick reminder that none of this podcast constitutes investment advice. Thanks for listening.